There's so much emotionally charged hype out there designed to sell newspapers and advertising rather than inform investors and traders. Want entertainment? Buy a newspaper or magazine or turn on the news. Want investment and trading concepts explained? Look to TechniTrader. TechniTrader is the gold standard in trading and investing education taught by experienced and accredited professionals. Don't learn to trade from fad-chasing day traders, and certainly don't think you can grow your portfolio by attending a weekend seminar or watching a free video online. Success in the financial markets is attainable, but like any high-paying profession, it requires the proper education to achieve consistent success. Join those happy few who've taken their investing and trading seriously. Call 888-846-5577 or visit technitrader.com.
Hi everyone, today I want to talk about the dark pools and the HFTs again. It's been a while since I've talked about this, but it's very important because there's a huge war being waged behind the scenes that you know nothing about. The dark pools are a hidden area of the market. Even if you have level 2 screens and are day trading or checking level 2, you do not have access to this information. And more of the transactions, the giant transactions and the huge activity, is hidden and off of the exchanges that you use. You will not see this activity until it lands in your charts after all of the data is collected from the over 40 venues of the stock market of today. It used to be, back when online trading and retail brokers first came on the scene in the mid to late 1990s, as the technology bubble was growing and expanding so rapidly, everybody thought the stock market and the economy would be booming for years. There didn't used to be retail trading or day trading for retail traders or short-term trading of any kind for the retail side of the market. Now you've heard the terms Main Street and Wall Street. Those are old, outdated terms that pretty much nobody uses anymore except for the retail crowd. It's the professional side of the market and the retail side of the market. If you are a small investor, if you have a pension fund, if you're a mutual fund investor, if you buy stocks on your own, if you day trade, if you short-term trade, if you go to those weekend seminars to learn how to trade and make extra money, you are on the retail side. And there is a very big line between the professional side and the retail side. And you are never, ever allowed to cross over it. If you go to a seminar and the instructor is telling you that you can find out what's going on, or you can become part of that group, if you buy their system, they are not being factual to you. You are not allowed on the professional side because the SEC has determined that you do not have the education to handle the professional side and all that goes on there. The only people that are retail that are allowed on there are called by the SEC accredited investors, who have a set amount of net value excluding their home. But we're talking today about the dark pools and the HFTs. These are two hugely powerful market participant groups. Both are very small in number. There are not thousands of dark pools. There are not thousands of HFTs. There are not hundreds of dark pools or HFTs. There are only a few. It's a very small, very elite group for both HFTs, which are high-frequency trading companies. These are companies that evolved out of the professional day trading arena, and they started going faster and faster in their trading activities because the whole market started to change in the late 2000s to 2010. Between 2005 and 2010, there was this huge, massive change, internal change that you don't know about. And so the HFTs were an evolution of professional day trading. And they started trading on the millisecond because we got rid of the spreads. We got rid of the fractions and went to decimals. And when we went to decimals in the market, suddenly we had penny spreads. In order to make a lot of money, you had to trade faster and faster and faster. The HFTs can trade 60,000 times per minute. So 1,000 times per second. That's really fast. HFTs are on the exchanges. They're on the retail side. They're on the side that is visible and lit. There's the lit market and the dark market. Now, the dark market is not dark and evil and corrupted. It just means that the orders are not lit. In the 90s, when some retail traders and the retail brokers first came online, and in the early 2000s, most of the activity was being sent to the exchanges. So you would see 100,000 share lots, 200,000 share lots coming through. And a lot of day traders would try to front run those larger lots coming up their level 2 screen and make 25 cents or 50 cents per share that they were trading on those huge lots, because the huge lots would come in after. So everybody could see what was going on. The dark pools did not want to be front run by the HFTs, because the HFTs can trade so fast in the milliseconds that it would move price way up. And if you see those huge gaps on the charts in the early morning, that's HFT activity. They're pushing the price up because they've heard news or they see liquidity draw. There's any number of things that causes them to trigger their orders, and they're all fully automated. There is no way that a trader can actually trade that fast. So they write these algorithms and they shoot those algorithms out to sniff around. They sniff around retail social media. They sniff around Twitter, stock tweets, chat rooms. All those things are all totally visible. Anybody can see them. The HFTs are looking for cluster orders where everybody wants to buy something or a large lot coming through. Surfacing on the retail side. Occasionally a large lot will surface on the retail side, but it is more and more rare. The dark pools got tired of being front run. These are the buy-side institutions who are buying on behalf of their mutual fund holders or their pension fund holders. There are about 24 gigantic mutual and pension funds, and then there's perhaps 100 or so larger funds. They're a small group, but they control hundreds of trillions of dollars worldwide, asset-wise. So they're hugely influential all over the world in every financial market, but in particular in the stock market, because the stock market is the business of businesses and it's what makes the global economy run. The dark pools are called dark because they are not lit. The orders that are being transacted there are over the counter, OTC. They're between institution to institution, corporations selling to an institution, the buy-side institution buying from a bank that has inventory in that stock, because the banks are on the sell side. Goldman Sachs and Morgan Stanley are financial services companies on the sell side. There's the buy side and the sell side institutions. The sell side institutions are also small in number. There's only about 10 really large big banks, and there are a lot of larger banks, but there are not thousands of them. So the buy side and the sell side have been at war now for over a decade. It used to be that the sell side, the big banks and big financial companies like JP Morgan Bank, Wells Fargo, Citigroup, all the big banks, Bank of America, dominated the stock market. They controlled everything. They controlled who got to be the IPOs. They controlled all kinds of things. That changed after the banking debacle of 2008 and 2009. The buy-side institutions stopped buying their products. The buy institutions stopped using a lot of the investment tools and all the other things that the sell side would generate and sell to the buy side. Because in those days, the big banks were not allowed to sell stocks directly to the retail side. They were not allowed to sell directly to you, mutual funds, and so on. So everything in the background has changed, and this is changing how the market evolves, how the cycles work in the stock market, how everything plays out, what kind of patterns show on your charts, and so on and so forth. Everything has changed and is continuing to evolve. It has been growing exponentially and changing dramatically. There is this massive structural internal change you have not been told about, you can't see, that has been going on. One thing that is happening is that there's some consolidation going on, and there's all these dark pool venues that the institutions are using. HFTs are on the retail side for the most part, trading on the exchanges. And then in between all of this activity, there's this war going on to who controls and dominates the stock market. And right now, the buy side, the dark pools are winning. More and more of the transactions that occur, and most of the large lots and the block lots, I'm talking 100,000 shares to 1 million to 5 million shares in one order, one transaction going off. You won't see those on your level 2 screen because they will not show, because they don't have to show them to you. They're not lit to the exchanges. It's not required that they be lit. This is all legal and legitimate. The SEC has been studying the dark pools for years and the HFTs for years to evaluate whether these are detrimental or beneficial to the market and to the investors of America, the average American. And what the SEC has discovered is that, yes, dark pools do help the buy-side institutions buy their stocks at the price they need to buy them at. They are not getting a better price than you. The dark pools do not move price. If anybody says that they do, they are in error. What they do is they have an algorithm that they set up, and they buy their stocks incrementally over time, just like the sell-side banks are buying buybacks for the corporations over time. And what they want to do is strike a certain price between the national best bid offer. So between the bid and the ask. So they do not wish to move price until after they have bought all the stock they wish to buy. Obviously, they want to get in at the price that they feel is a good price for that stock. So they say, buy me in if the stock reaches this price, but don't pay more than this for the stock. So the stock will stay within a tight price range that you can see on your stock charts if you know what you're looking for. And most retail traders are not taught this, because a lot of your seminars are telling you that dark pools are these evil guys that are trying to rip you off, and they're not. They're trying to save the mutual fund industry. They're trying to protect pension plans and be able to buy stock for those of you who own 401ks or mutual funds or index funds at a price that will allow them to provide you a decent return on investment and make them a lot of money too. So they're not trying to move price. Instead, they're trying to get prices stay the same. Now, HFTs are the polar opposite. They're trying to get price to go up or down. They're trying to move price in huge gaps, 10, 15, 20 points. That's where they make their money, because they are the liquidity providers for the exchanges. The SEC investigated, and they have studied them. They're trying to make most of them market makers. Most of them are maker takers right now. And there's a lot of activity going on to try to control the HFTs, but the HFTs are here to stay. So are the dark pools. And they are controlling more and more of the activity. So here you are. You're a small lot investor, or you're a retail trader, or you're a long-term investor. And you're trying to figure out what's going on. And you're told at seminars that market makers rip you off. There are no human market makers anymore. There are no traders. Nobody does that. It's all automated. The market's fully automated. Nobody's sitting around trying to rip you off. You just don't understand what you're looking at when you look at the charts. You're using 1990 analysis in 2018, and it doesn't work. A lot of the seminars that are out there, a lot of those classes that you go to, they're still teaching it exactly the same way as they did in the 1990s. They're teaching you to trade like it's 1999, and that's why it doesn't work. If you take a loss on your trading at the end of the year, what are you doing? You're supposed to be making a successful business out of your trading. You're supposed to be growing your financial self-worth. If you take a loss, what are you doing? Think of it this way. You're on the freeway. You're driving your car. You're trying to make a successful move from home to work or back again. You recognize the big trucks, and you know that the truckers are excellent professional drivers. You know that a taxi cab is also an excellent driver, hardly has any accidents, but also is a speed demon and can really zip around very fast. You know that motorcyclists are reckless and often die when they're moving around because they're young and they don't understand what's going on, and they have limited experience as drivers. They're not professional drivers. You know that that mom with those children in the back that are crying or yelling at her is distracted. You can see what's going on around you, and you can drive successfully from home to work and back again because you understand all the people who are participating in that commute. That's exactly how the stock market works. You have the giant institutions with large lots knowing exactly what they're doing, the professionals. You have the newbie motorcycle type guys who are just starting out to trade and have no idea what they're doing and think they know everything. You have the cautious people who are investing and are afraid of investing and being very cautious. You have all these different people. If you understand who you're trading with and who you're trading against, you will know how that stock is going to move, how long it's going to move, how many points it's going to move. You will understand this. If you understand about the dark pools and the HFTs and all the changes that are going on behind the scenes that you are not privy to, you will be a successful trader and a successful investor. No matter what instrument you choose to use, you will be successful. The reason you're not successful right now is because the market is in a very challenging market. And the fun days are over. It was easy to make money in 16 and 17. You didn't even have to know anything to make money in 2017. The market had gone ballistic. Now you have to settle down, stop expecting it to be easy money, and really learn what you need to know to trade successfully. Because the market behaves like this a lot of the time. And if you keep trading the way you are, you will lose all of your money. I'm Martha Stokes, and that's our radio show for this week.
There's so much emotionally charged hype out there designed to sell newspapers and advertising rather than inform investors and traders. Want entertainment? Buy a newspaper or magazine or turn on the news. Want investment and trading concepts explained? Look to TechniTrader. TechniTrader is the gold standard in trading and investing education taught by experienced and accredited professionals. Don't learn to trade from fad-chasing day traders, and certainly don't think you can grow your portfolio by attending a weekend seminar or watching a free video online. Success in the financial markets is attainable, but like any high-paying profession, it requires the proper education to achieve consistent success. Join those happy few who've taken their investing and trading seriously. Call 888-846-5577 or visit technitrader.com.